Welcome to another episode of the Lodhi Roundup. Now, before I forget, make sure you subscribe and follow my page so you get all these episodes as soon as they're released. Today, my guest is someone who I've been working with since day one, and he's an integral part of my business. He is someone that's my personal mortgage broker. He's someone that I recommend and trust with all my clients. The world of mortgages can be very complicated, but if you have the right broker on your side, the process can be seamless. Now, before I introduce the guest today, let's cover what we'll talk about. We'll dive into strategic leverage, where we'll discover how refinancing properties or obtaining a line of credit can unlock the equity you have built over the years and how the capital can be a key to expanding your real estate portfolio. Now, we will talk about wealth building, where we will learn strategic approaches to use this equity that you have built to acquire additional properties, amplifying your portfolio and fostering a genuine wealth building creation. And lastly, expert insights from the guest, where we'll decode the latest interest rate announcements and their implications. And with that, I would like to welcome Sinthusan to the Lodhi Roundup. Thank you for being here.
Thank you for having me.
No problem.
Long overdue.
Long overdue.
Yes.
Something that I know you have said no to in the beginning, but
you know how much I love being in front of the camera, right?
I finally managed to get you here
Right.
In front of the camera and for people to actually listen and gain some valuable insights from you.
Let's hope they gain that today.
Well, I hope so.
Yes.
I hope so. We have put down a very strict structure today to
Okay.
keep you on track and make sure that we give people in the room.
So that I don't derail too much and go off track and crack too many jokes.
No,
Got it.
Can't do
Okay.
that.
All
It's
right.
like strictly business.
Okay. Sounds
Okay?
good.
Now, I know you as a independent broker.
Yes.
And I've been in the industry for about a decade now, real estate industry, and I know the difference between mortgage brokers that work for banks and independent mortgage brokers. And you being an independent mortgage broker, can you actually go over what your role entails and what you do?
So being an independent mortgage broker means that you need to know various different types of lending for various different types of borrowers, for various different types of properties and very complex situations, right? When you have your ideal borrower who walks into a bank, right, and gets qualified on the spot, it's just a very simple, very clear-cut application. Boom, on the spot, you're approved, right? Typically, those type of clients are walk-in clients to banks, right? Now, when you have something a little bit more complex, like such as myself, you're not coming to me because, you want the best rate or you want this house and, this is the way you want it. You're running into situations that require more finesse. That's one. Two, you come to tell me what your dreams are, right? When you walk into a bank, the bank might say, hey, yes, we can get this done now. Go off, buy it. Or they might say, hey, no, sorry, unfortunately, you're not approved for this. Sorry, goodbye, right? When you come to me, it's more of like, hey, Sin, this is what I want. This is what my goals are. This is what my ambitions are. How can we get there? My job is not to say no. My job is to say, hey, hold on. It's no right now, but it doesn't mean it's a no forever. Let's work on it for the next 3, 4, 5, 6, 7, 12 months. There's some clients I've been working on for like 24 to 36 months to accomplish their dreams because they're a bit more complicated in terms of what they want to do and their ambitions are. They're very versatile investors that have residential, commercial, apartment buildings, a mixed portfolio. So that's what it is. We give more tailored financing options for individuals and clients and so on and so forth there.
So what I hear is, and that's something very similar to what I practice in my business and preach, that you plan. So you're listening to the clients, you're listening to what their goals are, you're listening to what they want to achieve,
right?
And then you help them get there. Now, you and I both understand that we can't help everybody, right? You can't, if the goals are not realistic, right? But we need to plan.
You can't help people who don't want to be helped.
Yes.
But you can help people who do want to be helped.
That's correct.
Yes.
That's correct. So, and something we do, well, I do in my business is called a real estate action plan, where we sit and basically talk to the clients as to what their goals are.
Yes.
And how can I help them get there?
Yes.
Right? And for you, like you said, tailored advice to help them get to their goals.
Absolutely.
Right? And I know in the real estate industry, so the next thing that I want to touch on before we go on to a very important question is basically so before we get there, the real estate industry itself is vast. You can do soft real estate, hard real estate, such as um, investments on your side and you doing mortgage deals, right?
Mm-hmm.
But currently, what's happening in the market, there is a lot of talks that the market is going down, the market is going up, everything is going down. This is what's up. But I think you need to look at it from a bird's eye view in real estate. I'm sure you can agree to this that there is money to be made, but you got to do it the right way. You
Correct.
got to look at the numbers and you got to basically really hammer them down and not just basically go based on what people are saying. If people are buying and everybody is rushing to buy investments,
Right.
it might not be the move for you,
Right.
but you got to plan it out.
Sure.
And in terms of the mortgage industry, so I know on the real estate side, there's a lot to look into and there's a lot of opportunities. But on the mortgage side, what have you been seeing for the last year or two? What's been happening? Because there's rates going up, rates coming down.
Well, if we're going to look at the last 12 months, we're definitely now seeing rates come down, right? It's public information. I hope people are watching the news and keeping up with the financial markets and what's happening with the government because it's important, right? When you live in a country where you have your money invested within banks, right, it's important for you to know what's happening in your economy, right? That being said, rates are coming down, right? How much more further down is it going to come? We don't know, right? This all depends on where the economy leads and how much the government feels they need to loosen up on interest rates to keep other categories going, right? And to make sure that they loosen sooner rather than later before
Yeah,
things get worse,
because I know on
right?
the inflation side, the shelter cost on inflation is
Yes,
still very high,
yes,
and that hopefully when the interest rates come down, I know the next the next announcement is on September 4th, and then in December. But hoping that once
yeah,
the rates come down, the inflation on the shelter cost comes down, and then it basically eases the market. Now,
yes,
going back to what I said, my very important question because I know we have a few first-time home buyers in the room and basically talking about the process because the dream is to own as a first-time home buyer, but
sure.
there is first-time home buyers, people that are upsizing, people that are downsizing, or I like to call smart sizing, and then there's investors.
Smart sizing. I've never heard of that one before.
Yeah,
It's like
that's
smart dressing, right?
yeah,
Yeah.
yeah,
God.
yeah.
Okay.
So looking at the process and walking as from an independent mortgage broker's perspective, first time home buyers, what should they be looking for? What should they consider before they get their first mortgage?
What I tell most buyers is not to always focus on interest rates, right? A lot of people focus so much on interest rates, they forget about opportunity, right? What you pay as interest rate and you're so fixated on it, that could bring your buying capacity down, right? But because you're so focused on that, you forget about future outlook, right? So when a first-time home buyer is probably buying a home, one of the first things that I want to understand is where are they in their stage of life today? Are they single? Do they have a girlfriend? Are they going to get married soon? Are they married already? Are they going to have children in the next 2, 3, 4, 5 years, right? Those outlooks are very important to understand, right? Because every time you're purchasing a home, you're exiting a mortgage that you don't know or have uncertainty on whether you're going to go fixed or variable. Then you're going to now, today you're a buyer, tomorrow you're a seller. Then the seller is going to come back and work with you, right? Then you also want to make sure that their outlook on what they're going to do in the next 3, 5, 7 years is also there because they want to be able to sell that property for top dollar because it's in a marketable area. There's some future opportunity for that property, right? And therefore acquire their second property or make sure, you know what, I might convert this into a rental, right? Those things are very important to understand.
First.
And that's why, as a mortgage broker, when you go to a bank, hey, what are you looking to do? I'm trying to get a $500,000 mortgage. Boop, 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 boop. Oh, no, sorry, it's 450,000. Work with this. Come back to us. My job is different. It's to understand these milestones in your life, right? And it's to build on those and help you build equity and wealth over a period of time, right? So, what should a first-time home buyer look out for? It all depends on that individual, right? I'll give you an example. I had this couple who have been renting for 15 years, young couple, four daughters. Well, I guess young is based on perception, but four daughters under the ages of 12, been renting for so long, then wanted to find something within 7 to 750 that's affordable for all of them. Decided to buy a townhouse, right? But they were so focused on interest rate, but then they had access to getting more down payment. Then I said, listen, at the end of the day, you got four daughters. What if we up the budget to 850, right? You can get the down payment. Now you can find something with a basement apartment that could be rented to offset a higher interest rate because you're going outside of your regular borrowing capacity. But then the basement offset will bring down your payment lower, which will match the traditional interest rate. These are the creative ways you want to structure your borrowers, because now look what happens if he says, listen, this home I'm going to be in here for a little long time, my daughters will eventually move out, then when you're retired you have basement rental. It's all about understanding a person's outlook, right?
100%, and finding their why.
Yes.
Because once you understand that, you can guide them better. Because your role or my role in this process is guiding them and educating them so they can make the best decision possible at that time.
Because remember, they're not going into a fish market and buying a $20 fish, right? Which they, if it's spoiled, they can throw out when they get home. This is a life choice that you're making, a very expensive
and
life
they have to be content with it because they're coming home every day.
Thank you. We'll do our jobs, go home and sleep peacefully, right? They're the ones that are going to be cursing us in their sleep.
Yeah, and we don't want that.
We don't want that, exactly. So we want to do right by our clients.
100%.
There you
and
go.
you have to respect their money, but you also got to respect them.
You're
Right?
absolutely
But you also
right.
got to respect yourself because you're in a profession where you're making dreams come true,
Yes.
right? But you could also easily make their dreams like go bad.
There
right?
you go.
So we gotta respect
It
that.
could become a nightmare. Yeah.
And when you mentioned that you have to do the creative financing and lay out a plan for them,
Mm-hmm.
and what I've seen, like, where you can go to the blue bank or the red bank, right? But what I always ask people is, does it matter where your money come from? Does the brand matter? Because I know for you guys, you just don't have access to the blue money, right? Or like the red bank.
Well,
money.
you don't have
access to.
Yeah, so you got major banks. So a lot of people confuse the terminology of A lending and B lending or C lending. Okay. So the way it derives is the way underwriting schedules are set by Bank of Canada of how income, down payment, and certain things have to be used when you're approving that client. So A lending basically means Schedule A lending criteria, which were filled with underwriting conditions of it has to fit within this box. So major banks are A lenders. You've got monoline lenders, which are A lenders, which are typically not brick and mortar in each storefront, but could have a head office downtown, but can and possibly give you better interest rates depending on the type of mortgage you're getting than a major bank, right? Then you've got your traditional B lending, which is Schedule B lending, which are trust companies and credit unions and certain institutions like that, right? Then your typical C lending, which is mainly private, right? Derived by mix or administrators and brokerages and individuals, right? But again, these come broken down in different varieties depending on how much of a sophisticated investor or sophisticated borrower you are, and also depending on how far your outlook is and what you want to do in real estate.
Yeah, because people get very stuck up on, hey, I just want financing from this bank, or I just want financing from this bank. But I know you and I have worked on numerous deals where you have actually explained to them that, hey, you can get exactly what you want, but it might not be this brand.
Correct.
Right?
Yes.
But it makes more sense for you to do this because I know there's a lot of programs out there as well. Firstly, for first-time home buyers, but also for people that have multiple properties. You can put an X amount of money down, but be able to get more mortgages rather than some other banks. So I know you have to look at the picture first, understand the why, and then give them the options.
You're absolutely right. And you also have to remember, not all banks are competing for the same product, right? Because they also want to separate themselves on what buckets they want to fill within that period in time, right? Some bank might offer you the best 3-year, whereas another was probably offering you the best 4-year, or another offering you the best 5-year. Some are offering you a better insured rate, right? Or some borrowers might say, hey, listen, I want to have a higher prepayment option where every year I can pay down by this much, and then look at your cost over the 5 years, even if there's a higher interest rate here, but a higher prepayment option here. There's so many varieties to look at, right? And this is where it becomes important when you're dealing with someone who's more tailored in that, right?
So you have to understand all the factors first before you answer, correct?
Thank you.
And that's what they ask us, because whenever I go to a party, the only question, or I guess the first question that I get asked, how's the market?
Mm.
And for me to answer that, I need to understand first, what are you looking to do?
Yeah.
Are you a buyer? Are you a seller? Are you an investor? Are you looking for a property in the GTA, in Toronto, outside? So there's so many factors, and first you gotta understand again the why,
Yes.
right?
Yes.
And then I can answer, well, based on this is what you can do. Even in this market right now where people are talking that it's all like bad and the market is going down, the condo market is taking a beating, right? The pre-con market is taking a beating. The pre-construction condo market in Toronto is different than what the condo market pre-con is in the 905 region compared to 416. But there's still some good investments out there. Now, every project is not a good investment, but there are good investment opportunities out there if you look at the right product.
Mm-hmm.
Just as on your side, from what I've seen talking to you over the last few years, that every product might not be suitable for me.
You're absolutely right. There is no one right product for a person. It's like trying to say that you only have this one shirt. That's it. You don't get to wear anything else, right? Until you discover something else and be like, oh, this shirt looks much better on me.
Yeah.
You don't really know what's right out there for you until you experience different avenues, right?
Yeah. And you have to explore that, and you're a person that can help people do that because you have access to that, right? Compared to somebody who just access to, I guess, one type of product too.
Yes, put it this way. Like, you go into this bank. This bank can only sell you what they know and what's on their shelf, right? You go to this coffee shop, right? And you want this espresso this type of way, but they've only got the procedure and the beans at this other. You can't ask them that. You can't tell them, hey, I want it from this bank, but this bank's also offering me this. Can you figure out a way to create a new policy to mix everything? They're like, no, unfortunately, sorry, right?
Yeah.
We can't. But when you come to a mortgage broker, they'll see and understand you and say what the best way to go about it, right?
Yeah. Now, a lot of my community over the last few months, actually, since we started doing real estate action plans, they've been asking me, well, Majid, I have this one property, and I am looking to refinance to either upgrade or buy an investment property.
Got it.
Right?
Okay.
Now, that comes with a lot of different factors to look at. Now, to keep it simple for the audience in the room, from a bird's eye view, how would you explain that if somebody's looking to do that? What would be like a quick answer?
If they want to keep their investment, if they want to keep their property, convert it into an investment property, purchase another one, or sell.
No, keep that, refinance.
Got it.
Because the topic of refinance, it gets thrown out a lot as well. And I know there's different kind of refinancing, right? And there's different options that you can pitch to people. Can you unpack that a little bit? So if they have a property, they want to refinance, take the equity out and buy another one.
Okay.
Right? And that would be their investment property.
So they're refinancing a primary residence to purchase an investment property.
Yeah.
I think that's a great idea, right? But in terms of understanding how the procedure works, well, typically, okay, let's just say somebody's bought a property and it's worth X amount today. Fast forward 5 years, it's worth a significant higher amount, especially if we bought in 2019. We're in 2024. We would have definitely seen some gains there, right? When you go to a traditional bank, A or B, whichever lender, you can typically go up to 80% loan ratio, right? Let's use some numbers. It makes it easier. Okay.
I was just gonna say. So we bought a property 5 years ago at 500,000.
Perfect. It's worth 800 today.
Yeah.
All right. Went up $300,000 in value, and we have actually seen that in 100%. Some cases. Okay. Now we can typically go up to 80% of 800,000. Right. What is that? 160 minus 800, 640. Am I right?
Yeah.
640. That $500,000 purchase that person would have bought at the time would have had to put some down payment down. Let's say they put 10% down. Okay, 450 mortgage, they paid it over 5 years. Let's say they now paid it down by $25,000, $30,000. There's a mortgage about 520 left over. So no, 420. 420 left over.
420.
So between 640 and 420, you got about $220,000 that we can take out, minus your breaking cost on your mortgage. But luckily, if they're maturing in 5 years and there's no prepayment penalty on that. So legal fees, whatever it is, let's say they're covered with about $200,000 left over, right?
But they're gonna leave 20% of 800 in the property, correct? Or 800 of the equity. I mean,
800
20%
of the new appraisal value, right? Mind you, the value is up in the air, right? It's just to say now with appreciation, this property is now appraised at 800.
Yeah.
Based on this, the bank will say, hey, this property is worth this much. We can do 640 as a new mortgage. 640 minus your 420, which you currently have owing to your current lender, this leaves us with that much to play with, right? Now, give or take, with 200,000 plus closing cost, right? You can essentially purchase another property for $1 million, right? And that could be in so many variations. If your income can support it, if your lifestyle choices, based on what your other expenditures are, can support this, right? Because at the end of the day, you have to understand, real estate is a wealth building business. It is not an overnight get rich quick scheme where you put $500 into something and it converts to $1,500, 3 days, 5 days. It's not Bitcoin, right? It's not crypto. It's not like that. It's more of you see your reward over 10, 15, 20 years, but when you do see it, it's just a ripple effect of just fixed income being paid to you, right? And so much wealth underneath your belt that it is very recognized widely by institutions, people, everyone, to lend against, to leverage, and to take money out.
It's a hard asset that you can feel and touch. And
Correct.
like they say, the longer you are in the game, the more money you make.
Yeah.
So time in the market makes you money, not time out of the market.
Unless if we all going to transport into the metaverse and never come back to real life.
Yeah, that's
Yeah.
probably not going to
Yeah.
happen.
Unless if that's possible, then
Yeah.
then I'll cash out here.
Yeah.
But unless no, I'll stick around here for a little bit longer.
Yeah. And if you are sticking around, it's good to have real estate because you got to live somewhere.
I personally think so. I have been investing since 2010 when I bought my first 2009 to 2010. I bought a handful of properties, still hold on to most, right? And it is the best decisions that I have made. Have I had a lot of speed bumps and roadblocks along the way? Yes. Have I had situations that were nightmares? Yes. Have I had situations where I really had to go back to the drawing board and think and hit myself on the head and be like, why did I do this? There's moments that come across you where you ask yourself, like, why am I doing this? I'm so stressed out. Why not? But you plow through it. You plow through it. You plow through it. And before you know it, 5 years later, you look back and you call up your real estate buddy and I'm like, oh man, I'm thinking about selling this. You know, what do you think it'll go for this? Nah, man, it's worth much more than this, right? And it can go for this. And you're like, oh, can I swear?
Yeah.
Oh shit! You're like, you know,
Yeah.
right? Really?
See,
Oh, so that headache was worth it, you know. So and that's what it is. And a lot of people look back and say, oh man, like, you know, you did this, you did that. I'm like, yeah, buddy, do you know how many nights you lose? You know how much stress you go through? But what I tell people, it's worth it. But can every individual sustain that stress and sustain that? What's the word I'm looking for? Keep it together. Keep it together.
It
and
all
sacrifice.
comes down to your lifestyle, right?
Correct.
So, again, my business is wrapped around the concept of helping young professionals
Yes.
buy their house or invest, but
Yes.
that suits their lifestyle.
Yes.
Because I know whenever you and I sit together with a client, we do our whole spiel, and then at the end we ask them, does it fit your lifestyle? Or we figure out while we're talking to them, and then we advise them, or you advise them and tell them, okay, well, this is what I see, right? And then I always tell my people that, hey, it shouldn't impact your lifestyle where if, like, you have to be comfortable. You do gotta live somewhere, so it's either you're renting or you're buying. But it has to suit your lifestyle. And like you said, some people are not okay with the stress of being a landlord.
That, and a lot of people are not okay sacrificing, you know, $500 dinners every weekend, wearing Gucci shoes, you know, looking very pleasant to other people's eyes, right? You got to make sacrifices to get ahead. Then once you get ahead, those sacrifices you made now, this real estate portfolio or asset will pay for your Gucci shoes, will pay for those $500 dinners where you don't even have to look at the bill. All of these things come in ripple effects.
Yeah.
But going back to you saying young couples, it is very important for young individuals and young couples to push their way through and struggle and purchase their first home, even if they don't plan on being investors or building on top of this and acquiring more. It's very important to have something that's your own, paid off at least at a certain age, because you don't want to do it at the age of 40, 45, and then carry your mortgage for another 20, 25 years while then having kids and then having to pay through their way through college and all these other things and things that life throws at you. And before you know it, you're 70, 75 years old, still holding a mortgage and can't go on vacation, right? Can't enjoy the sunset years of your life. Earlier you start, earlier you finish, right? Simple.
I think you and I have a very good example with somebody who bought in Pickering with us. They just refinanced. I won't say the name, but
Yeah.
and I remember when you and I were working on the deal, the wife was very scared. Um,
Sure. Yes. Okay.
yes,
Got it.
just did the refinance.
Yes. Yes.
And now 5 years after, and now they're looking to buy, basically upgrade next year, and she's so happy.
Yeah.
Right? Since she's bought, obviously the property has gone up. They've bought in a very good area in Durham, but while they were buying, I know once they left the office the second time, when you and I were talking, and you're like, they're so scared, but they're gonna be so happy after.
Exactly. Yeah.
And we obviously worked hard to make sure that they get into the right property, they get the right product, and now they're able to upgrade,
Yep.
right? Buy their,
Well,
maybe next,
how much did they initially buy for? Do you remember it off the top of your head?
I believe they were at 540 or
540?
550, something around
I
that
think
line.
we did an appraisal now. It came in at 850,
Yeah,
give or take,
850
right?
at 60, yeah.
850, 860.
And I think the
They,
property in that area can easily go for about 900. And depending on obviously what
yes.
happens and
Yeah.
where the market is, but they're in a good spot, right?
Yes.
And I know we just had a client who hasn't bought. He's been renting for about, I think, 10 or 15 years, and he wants to buy his first property, but the area that he wants to buy in, he's about $1.5 to $2 million down,
Mm-hmm.
right? And you were telling him how much he needs,
Mm-hmm.
and it's difficult, right? And I've been like, we tell people, even if you're renting, keep renting, but get into the market. So eventually, when you do want to buy,
Yes.
you have some
And,
equity built
and
in.
a lot of young couples need to also understand that what we're guiding you, and not just me and you, but any professional who knows what they're doing, right? When they're guiding you and telling you, just get in and build your way there, they're not pushing you into this home saying, hey, this is your forever home,
Yeah.
right? 1,200 square feet, you're going to die and bury yourself in this house. That's not what they're telling you.
No.
They're just telling you, get in and let's start somewhere,
Yeah.
okay? It might take you 8, 10, 12, 15 years to get to your dream home, but you're starting. You can't be renting for 15 years and say, okay, now I'm going to buy my dream home. Buddy, that dream's far gone.
You can, but it's tough.
It's going to be very tough
It's
unless
tough.
you built some very successful business or made some crazy risky moves where
Yeah.
you banked a lot of money, right?
Yeah.
If you're too scared to already buy something that needs some work or it start, there's no way your personality is going to sustain
What
that.
I tell
right?
people is the first home you buy, it will obviously not be your dream home, but you gotta work up the ladder,
Yes,
right?
absolutely.
And eventually you will find something that you will call it, and then you'll stay there forever, right?
Yes,
But you gotta move up the ladder, and
absolutely.
you wanna move it up slowly and organically, rather
Yes.
than what we saw in the last 3-4 years where people have paid millions. Good for them,
Yes,
but it's not natural,
yes.
right?
It's not.
natural.
Very
Now,
volatile.
coming back to the refinance, I want to touch on, so when you are refinancing a property, what is the difference between a full refinance and a home line of equity, so HELOC?
So can I
'Cause that
also
gets
use that
confused.
client as an example and go back to the
Sure.
difference between
Sure.
banks, lenders, more. So this is actually a very good client that you brought up. So when we close them, we put them with a Schedule A lender, but that's non-bank,
Yes.
because they were offering the best rate for something that this client was particularly looking for a
Yes.
term. We gave that to them, right? But then when you called me back up telling me, hey, listen, they got a timeline between 16 and 24 months, where because I think they just had a baby, but
Yeah,
they didn't
yeah.
want to make any quick moves
Yeah,
right
yeah.
now, right? They wanted to settle in and make sure they're both comfortable before making that move. So 16 and 24 months, they had a timeline of where they wanted to sell this and upsize, right? So what we did was we the same bank that provided it, remember, you got to know different lenders' products, right? That lender does not offer home equity lines of credit, right? But do they offer very supreme rates for existing clients? Yes. But now, our borrower, understanding, will need at the time when they sell this house, need some money for renovations
Yeah.
to make sure the house is in tip top shape to get top market dollar at that time. They will also need money to be given as a deposit for their new purchase. And I think their new purchase was around what, 1.2 to 1.5, give or take?
1.5, I think. That's what they're looking
Give or
at.
take. So they're going to need at least $100,000 as a deposit when you're purchasing something
Yeah.
like that, right? So now it comes back to a mortgage broker explaining to their client, hey, this is great that this bank has offered you prime minus 1, but this bank is now offering you prime minus zero point 0.8. But now this bank is also offering you a home equity line of credit, which this bank is not offering you in this whole transaction. But does this 0.8% really make a difference in the next 24 months based on what your next goal in life is, right? Because now let's just say you need 100 plus $50,000 for deposit and reno. Where will you go for this money? You'll tap into your 21.99% credit card interest, your 11 to 13% line of credits, right? Tap out on all of this to get this money out, tank your credit. Then it doesn't look good when you put it into a new application for a new mortgage approval,
Yeah.
which then your credit might not score so great, where your rate at the time could also be higher than what it should be. These are the explanations. It's important to understand your client, know their outlook, and know what's the best product for them. And try to educate them on, listen, don't just look at rate, look at your outlook, right? Those things are very important. But now going back to a full refinance versus a line of credit. A full refinance is when you're meddling with the entire position of the first mortgage. Again, with that client, for something balance, right? If we had full refied it, that means they're getting all that money in cash back into the bank account. It doesn't make sense if there's no utilization for that capital within a reasonable period of time after that transaction closes. Because now you're paying money on that cost of borrowing that's new at that new interest rate.
But you're not using it.
But this money has not been used for its purpose yet, right? Unless if you can put it away somewhere where it's giving you a decent rate of return, right? That's a topic for another day.
Yes.
But that being said, where you need to understand that when you do a full refi, there has to be a purpose for those funds within a reasonable period of time, right? From a business sense.
Yes.
But when you do a home equity line of credit is where you keep your current mortgage where it is, you apply for a line of credit for the amount that you're looking for, but this money is just available to you and is only tapped into when you need to use it, and the interest only starts bearing when you tap into it, right? So that was for this particular client.
Yeah.
Right? That's
And I think that's the difference where a full refi, you get the money in your bank,
correct.
and you got, or you should, or you want to use it right away, or you use the money to pay off debts, or like
Exactly.
basically condense everything into one big loan, which is
Yes.
a mortgage. Or on the other side, HELOC, the money is available to you and you can use it whenever you want. In the scenario that what you were talking about, it made sense. But I think the main point from that was that you have the foresight into knowing that what they will need in the future rather than the client, because when they come to us, they want you and I to guide them. And the way you are guiding them is telling them, hey, in a year or 2 years from now, you'll need money to do renos,
Mm-hmm.
and you'll need the money for your deposit.
Correct.
And knowing the situation, they didn't have the savings for the deposit,
Yes.
but their money is locked up into the property.
Yes.
So they have the money, but it's locked up.
Yeah.
But this way, they can use the HELOC,
Yes.
and when they sell their property, do whatever they need to do, it will all be washed away, and then they get a new mortgage. Now
There
money
you
is
go.
really being affected, and they're not stressed
There you go.
because the money is available to them from their own property.
But imagine the day you make that purchase, all right, and you tell your client, hey, I need 100 grand by tomorrow.
Yeah. Well, I
Most
mean,
people aren't prepared
in my
for it,
case,
right?
I make sure that I do
They
all
know,
the
but
homework,
yes.
and I tell them like, hey, you gotta have X amount ready within
Yes.
24 hours before we even go out. I tell
Yes.
them, hey, if you go out today and you like a property, but you don't have the money for the deposit, but you like the property, now you're firstly sad that you don't have the money.
Correct.
Now you're disappointed that you went out, you like the property, it might have been your dream property, and now you don't have the money. So now we basically firstly I didn't like utilize the time properly.
It's a waste
But
of
now
energy on all
you are
angles.
disappointed, and I don't want to
Yes.
disappoint them. So I firstly educate them,
Yes.
right? But you gotta have the foresight to make sure that you're helping them.
Correct.
Now, in our case, we also like to do the same thing, but do all the homework, right? To make sure that, because when the client is buying or selling, they're very emotional, right? They're in a different zone, and your job or my job is to make sure that we look at all the back end and make sure that things go smooth for them,
Yes. Yes.
right? And that's essentially what they partner up with us to make sure that the process is smooth, right?
Absolutely, and
And
they're
we're
looking
going
for
to bat for
guidance,
them.
right? And yeah, and going to bat for them and covering their grounds that they've missed on. Otherwise, we would cease to exist, right? There's no purpose for us.
No,
Right.
no, no. And we have to be useful.
Absolutely.
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 Useful and resourceful, if that makes sense. Now, going forward, so looking at for some people that are here and some people that will watch the recording, drawing up a picture if they currently have a property right now, and now they want to basically get into an investment property but cash flowing, right? Now I know that for that to happen, you gotta go outside the GTA,
Yes.
right? But taking the emotions out and just looking at it strictly from a numbers perspective, right? What is something that they should look forward and something that while doing that they should reconsider um, looking at strictly cash flow? Because I know when you're looking at cash flow, you're going outside the GTA and now you're driving.
So as an investor, right? Okay, so you've already got your house now. You're looking to invest money into another property, right? Cash flow, one way to do it is, obviously getting places of multiple rentals, right? Upstairs and downstairs. Even if downstairs is not completed yet, but there's future
But a
for it.
question on that:
Yeah.
if the basement is finished, but not legal,
There's still ways to get around it to use that income.
okay.
Just
So that is
not
important for
major
people nowadays.
lenders,
Yes.
but there are alternative lenders that can do it.
Okay.
Remember, this all goes back to don't focus on interest rate, right? Focus on income generation, taxation, right? Capital gains. Now you're not just buying a home for you to live in. This is a business.
Of
So
course.
treat it like a business.
So you can't be emotional when you're buying this property, but I think the thing I wanted to touch on was your two sections, so top and bottom, so
Correct.
basically a duplex,
Yes.
but using that income from the duplex to be able to get cash flow, but also use that to leverage,
Yes.
right? But if it's not legal, can you still leverage from that,
Yes.
depending on the lender?
If you got a separate entrance, separately contained unit, where upstairs cannot freely go downstairs and downstairs cannot freely go upstairs, kitchen, bedroom, bathroom, we can make it work.
That's good, because nowadays I guess it's very important. Firstly, cash flow, but also being able to rent top and bottom
Correct.
and being able to qualify,
Yes.
right?
So you can definitely make it work, right?
Okay.
To cover that topic, yeah.
Okay. Now, in terms of basically the forecast of the market, so I know that there's been 10 increases and 2 decreases so far. What do you predict?
With hopefully more to come.
What do you predict
What-
the next?
You don't have to be a genius to know what's gonna come next based on what's the information that's given to you, right? I don't hold a crystal ball. I like to make sure that everybody knows this. I do not hold a crystal ball. No crystal ball here, all right? But based on stats, data, figures, conversation, we are expected rates to decline, right? How much more is it going to decline? We don't know, right? But is it going to happen in the next 6-9 months? Yes, right?
Okay.
So that is happening right now. We're also seeing, fixed rates go down lower. Banks are getting more competitive, right? So we are seeing that, yes.
Perfect.
Right.
Now, I kind of want the next section to be a rapid fire 60-second section. I know I'm putting you under the bus here, but
Did you
um,
do this to Ramon? I don't know how fast he is with
I
rapid.
did, but it was
Yeah.
a completely different
Oh, okay.
set of questions.
Right.
But in this case, I want to just hit four questions, but I kind of just want you to summarize the answers quickly. So,
Sure.
fixed versus variable.
Fixed rates are rate is fixed for the duration of the term, usually preferably better for people who look for security because they know that this is going to be the payment for that duration of that term. Variable is usually for people who want to ride the market, maybe have a shorter outlook than what the term is going to be in maybe exit strategy on the house, right? Or maybe they just want to ride out the market and be on the more daring side.
And to break fixed or variable,
When you break a variable rate, typically most occasions it's 3 months interest unless if you come with certain no frills clauses behind those interests, right? Depending on the discount that you get, but it's typically 3 months interest. Fixed rate, I wish I could tell you, but I cannot. It's called interest rate differential,
Okay.
which is calculated at the time of breaking. So you can't get a mortgage today and ask them, hey, I got a 5-year term. What will be my penalty in 2026, March 6th? They won't tell you, all right? It's calculated at that time based on what the cost is. Yeah.
overnight rate versus prime rate.
Overnight rate, not to bore you, overnight rate is pretty much what the Bank of Canada sets for cross-selling money. We can get more deep into it, right? But that rate triggers what prime rate is for the spread that to be made for the banks to make their money. All right?
Okay.
That's what it is.
So we'll
But
touch base on this because that's a long answer.
that is a bit more complicated.
The
And
stress test.
Yeah, stress test is pretty much traditional for A and B lenders. For whatever your contract rate is, let's just say 4.99, based on your income, debt, and anything else that needs to be used in an application, we don't just qualify it at 4.99, we have to qualify it at 6.99 being the interest rate payment, okay? That's what stress test is, but this is not applicable to all lenders. It is applicable to most, but not all. There are some exceptions or exemptions to particular lenders.
Conventional versus I think I wrote
Insured?
Yes.
Non-conventional?
So conventional and insured.
It's typically conventional and insured.
Okay.
Conventional is when purchase price up to a certain price point, putting 20% down, right?
Okay.
So your mortgage is dealt with and underwritten by the bank, approved by the bank, and sent back to you. This is usually on the bank's balance sheet, right?
Okay.
An insured mortgage is always a purchase price of $1 million or less than 20% down, depending on the scale of the purchase price and how much of it has to be as down payment. But now this application has to get underwritten by the bank, then by the insurer, whoever the insurer is, approved, signed off, then covered by the bank, then back to the client for approval. But again, now you're paying insurance premium fees, provincial sales tax on that insurance, limited on amortization, limited on flexibility. So there's certain things that come with that, right?
And getting a rate for an insured and a, I guess, non-insured mortgage.
Insured mortgage rates will be lower than uninsured mortgage rates because all the risk is weighed off the bank in the event of a default of this mortgage. Remember, at the end of the day, a bank is a business. They don't want to be in the business of losing money. When a mortgage is uninsured, it is there on their balance sheet, their judgment call. That's why it's slightly higher. Whereas an insured mortgage, there's no added risk to them. It's written off, send it back to the insurer, insurer covers it.
Yeah, people always ask me, hey, like I'm paying 20%, 30%, like 40%. Why is my rate higher? Right?
That's
But I guess it's the risk.
Mind you, the rates are priced based on risk, right? And that's why, like one client who's got 40% LTV, TDSR so low, and like it's just a no-brainer, right? And they might go to the same bank but get a slightly lower rate, right? Whereas someone, 80% LTV, TDSR is over, and it's slightly higher is because the bank predicts that this is a much more riskier file.
Yeah,
Right. That's what it is.
100%. I think um, this session has been very impactful. I feel like very um, valuable, right?
Oh,
And
right.
we will definitely take some questions after. But is there anything else that you would like to add before we wrap up?
No, I think we've covered most of it.
And
Right.
what's the best way for people to reach you?
My phone number. Don't leave a voicemail. Text me if I don't answer. Right.
Okay.
I rarely ever listen to my voicemails because it's usually people closing their doors.
Okay.
Right. Or or something in the background. But call me.
Call you,
Always.
and I will
It's like
leave.
better call Lodi, but they can call me.
Better call Cindy,
Yeah.
right? But you can always reach him through me. I will always
Yeah.
connect you
Absolutely.
with him. He
Yes.
is my main mortgage broker. If this was valuable to you, please share it with your friends, family, and do leave us a comment so we know how we did. See you next time.